It's common for people to turn to the news headlines to try to understand why did the market move in the direction that it did. We saw in the past trading session on the main markets, all sectors were down 2.36%. Information and technology, consumer discretionary were hit the worst. In this video, I'm going to teach you how to de-risk your mental mindset. When you see red like this, a lot of people will get caught off guard, especially if price picks up before it drops. There's a way that you can understand what the market could do in advance of its movements. I'll discuss that as well. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love by trading and investing more effectively, exactly like the institutions do. Please smash that like button and don't forget to subscribe. We have information here not covered on any other channel. De-risking your approach to the market is incredibly important. One thing that we saw in the past trading session, the Dow, the S&P 500 and the Nasdaq came down, and they came down relatively hard. We're in extreme fear territory inside the fear and greed index of the main markets. To de-risk your approach to the markets, you need to understand how markets actually work. When you see bank health just decreasing, this is not good. Basically, the markets follow banking sector health. And also, markets follow net Fed liquidity. And what have we seen recently? Net Fed liquidity started to come down. We've seen some really interesting action in Bitcoin. We got above a very key level that I noted in the last video, but that wasn't reflected in the S&P 500, the major indexes. Stock market optimism and bond market optimism came down. We are getting a bit of a divergence. For the elite members of the CTKS method service, one of the things that you want to keep in mind is what's happening right here. This is going as we anticipate. Make sure that you watch this month's video inside the service. It's vitally important. The fastest way to de-risk inside markets is to understand what you're actually doing. The free cheat sheet from ctksmethod.org gives you a framework where you can understand market intercorrelation and interconnection. And if you don't, you're going to burn your funds. Simple, pure, and unfortunately, very upsetting because it's something that you can get ahead of. If we looked at the VIX before the last trading session, the VIX was coming up. Now that meant that there was a very strong likelihood of the major indices retracing. Bitcoin, Total, and the alts were throwing in a really good performance, whilst the VIX was actually going up. That upward progression has slowed somewhat, and there was a key level that was breached. We'll talk about that more a little bit later on. But the issue is this: if the VIX spikes, watch your prices come down, especially inside the major indexes and also the components of those indexes. Gold put in an incredible performance yet again. Don't forget, it's not a simple intercorrelation and interrelationship between the VIX and gold. It doesn't mean it's a law. VIX goes up, gold goes up. Not necessarily. And I was explaining this inside the service video at the start of this month. One of the things that we keep our eye on is the intercorrelation and interconnection between the major market indices and also Bitcoin. Bitcoin tends to feel it first. We do get divergences from time to time, and we're going through a divergence now. The issue is why. The most likely indicator is liquidity pumping into the system as a result of emergency actions. Bitcoin tends to feel those things first. But don't forget, it can't escape the stock market's gravity, but it can indicate turning points. As the VIX was coming up, what we noted in the past trading session, we lost that structural support on the S&P 500 around that 5270 mark. We literally came down to the 5100 and bounced. we had a negative CTKS gap, so it meant that we could fall through rather quickly. This particular chart is in the last video, and I have been talking about these structural levels for some time. If you were prepared, you weren't scared, because if the VIX was going up, the S&P was coming down. The financial media will tell you a news story as to what typically people want to hear. If the markets are coming down, they'll be all doom and gloom. If the markets are coming up, they'll be, yay, everything is fixed. Both are idiotic. You cannot just live in a wave function. You need to just zoom out and understand what and why things are happening as they are. The ultimate way to de-risk is just keep one eye, one ear, and one half of your brain closed when you read financial news. Often what you'll see are very key little words, and I'm just going to share what I've experienced over the past 4 decades. For example, Dow tumbles, dollar slides as. This is a causal link. So therefore, you would expect the Dow to tumble and the dollar to slide every time Trump talks about the Fed. This is not necessarily the case. Price is just moving in a wave. Gold surges to fresh record on worries over trade. Now, there is always signal within news, but it is typically buried, and it takes a professional mindset to dig it out. Now, what does this mean for you? When you read the news headlines, especially if you're new to trading and investing, don't just buy automatic connections. Now, an automated connection is a little bit like this. Stock market today, Dow and dollar drop on. It's the on that creates that connection. Another way to de-risk is to simply understand where a particular chart can be supported or not. If you look at a chart like this is just a typical news chart. It doesn't give you any indication whatsoever as to the structure of this chart. Structure is everything. This is just simply price. If you're trading or investing in a stock such as Tesla, you must know your structural levels. For example, this is what happened inside the price action yesterday in the past 24 hours. Now, the way that you learn your structure is either to mark it up yourself through level 1 and level 2 standard certification, or you can just have that done for you automatically through the service. What you actually see right here is that we were trying to get above that 244 price level, and there was quite a lot of structure, quite a lot of sellers. This is called overhead structural resistance at this point in time. We had a level of structural support just a little bit under that 238 level. But when we saw the VIX start to spike up, we knew the major indices and stocks and also crypto would be under pressure. We were likely to lose this 238 mark and get action around that 227 and the 223 level of structural support. And what happened? It literally dropped down and obeyed structure. Now, why is it coming up at this particular point of time? It's because of the VIX. For example, if I pop the VIX on like this, what you can see is as the VIX was increasing, Tesla was getting smashed, and we know that things were getting smashed all across the board, and then it started to curl. So what you see here is an inverse relationship. Now we can invert the scale and you can see it more clearly. If you're not doing this kind of behavior, you're not de-risking your portfolio, your positions. And that is incredibly dangerous. This is like literally 101. It is so important for you to do this. But the most important thing is to understand structure. If you understand this intercorrelation and interconnection, yes, it does give you something. But structure gives you everything. Structure tells you where it's going to stop, where it's going to flatten out, where it's going to find support. And this is absolutely vital in this market. This market, as I've been saying for at least a year, 2025 is the year of the trader. Now, what does that actually mean? If you're an investor and you don't trade, you should learn how to do so. Just use really small position sizes. A lot of investors think automatically that they put money into the market and they're going to make money. Of course, that's the reason that you put money in. But without knowledge, you can't make money. You will suffer knowledge taxes as well as emotional taxes. And if you're lucky, if you profit, you can have government taxes as well. But unfortunately, profit is not assumed to be the case unless you know what you're doing. A lot of people say, I have no idea what I'm doing, I'm just going to hold on for dear life over a long period of time. That is financial suicide. A lot of people think that, but it is really, really the wrong way to think. Now, why is it the wrong way to think? If you think about it, if you buy, for example, if you bought Bitcoin at 108,000, you were just pulled in with the mainstream media news saying it's the best thing since sliced bread. And it is pretty damn good, no question about it. But if you're looking at the current price of Bitcoin, you're in pain. You're in a lot of pain. And if you bought alts around the same time as Bitcoin was 108, they've bled out by huge amounts. You've got to be careful because a 50% decrease in price doesn't take 50% to restore your price. It takes 100% to get back to the level that you were at. And that is not always easy to do. Now, when looking at the S&P 500, we saw this area around that 5280 mark. And we've got a level of structural support that's starting to play in, and this was the reason that the VIX started to retrace. When you understand the charts, when you can stack probabilities, it is a literal game changer. This is how to de-risk your portfolio and minimize your losses. I talk about this a lot in the Profiting from CTKS Method Structure course. It's really important. If you think that it's cost money to get educated, wait till you get the bill for ignorance. Now, something really interesting is happening inside the market. We're seeing Bitcoin actually recover at the current time. Now, what does this mean for the stock market? Have we just seen capitulation? Quite possibly. We may have some more negative downside action, but this is incredibly positive for financial markets to see Bitcoin coming up. Why is that the case? Bitcoin is very, very risk sensitive. In the last video that was done, I was talking about the concept that we need to look at one particular level of structure. It was structural resistance at that 85,728 mark. I'll just throw on the structural indicator from the service so you can see more effectively what that actually is. The 85,728 managed to hold and hold and hold basically across the entire Easter break, and then the shorts got absolutely and utterly smashed. That has taken us above and created a bullish case scenario inside crypto. Even though the main markets are coming down at the current time and we do have that divergence, the crypto market is considered bullish at this time. Just zooming in a little bit, the bullish case scenario, we get above this 87,638 and start to challenge this 89,157 level to the 89,610 level. There's a lot of sellers. If you thought this was a tough level, this is way tougher. At least we're aware, we know what's going on. And you won't find content like this anywhere else on YouTube or anywhere else. This is institutional grade content, backed by nearly 4 decades inside financial markets. That's the bullish case scenario, and we know it ahead of time. We know exactly where the sellers are hanging out. We have X-ray vision. And when you think of the negative case, if we drop below 86,882, the next level of structure is at that 86,318 level. We could very well come back and retest the 85,728 level. Again, we know where the structure is. We don't have any cause for concern, any anxiety whatsoever. Just think about Tesla. In Tesla's case, we saw that it was failing. The VIX was spiking up, and the inverted VIX told us where Tesla was going from a structural perspective. Structure is everything. Please let me know in the comments, what's your experience with CTKS Structure? I also mentioned that there were a couple of things that we needed to look at. One was a level of structural overhead resistance in total crypto market cap, which was pretty much keeping the entire crypto market suppressed. Now, what people typically do is that they'll just mark up recent indicative price action. Now, that will RIP your money. You do not want to do that, because if you do it, you're taking a fraction of price and saying, it's representative. It's not representative, it's just the current price. But current price and representative price are two different things. When we look at that particular level that we needed to get across, it was the 2.69 trillion. This is also incredibly bullish. We did note that we had that big breakout on Bitcoin. Bitcoin came up and then started to flatten out and then started to come down. Note where it flattened out. All the markets work in concert with each other. It is incredible to understand. When you get this level of structural understanding, it will change the game 100%. You're no longer guessing, you're seeing. Now, what does this mean? If we hold on to this current level at 2.69, we need to get above this $2.71 trillion structural level to confirm upward price momentum. So that's something that you need to be very, very aware of. If we can't confirm this, we're just literally making a lower high. If we do that, we would expect an underside retest and a resumption down. If we can hold it, we would expect challenging of this $2.725 trillion level and coming up to the $2.77 trillion. What you do, how you gain your certainty, how you de-risk your position, is to simply observe price structure in its natural environment. You can't control things. A lot of people say, oh, I can control my life. I can control what happens to me each and every day. I have absolute certainty as to what I'm doing every minute of every day. You already know that's rubbish. We don't have that level of control. Why do you expect it inside financial markets? You expect it because there's a lot of scammers out there telling you that's just normal. They are liars. Do not be sucked in by certainty. During this time, I really suggest that you keep your eyes on the structural levels of Ethereum. Ethereum is majorly weak. Of course, it's a base structure, but it is so goddamn weak. It's terrible. Vitalik, what the heck are you doing? The second largest crypto is acting, I don't know. Please let me know. What do you think of Ethereum in this current cycle? The financial media will say to you, just look at a chart like this. Remember the chart from the Wall Street Journal. Just look at it like this. This is all you need. Oh, holy Toledo, how could that ever be the case? You need to know where the structure is. You need to know if you're getting structural failures or structural passes. You need to know the positive CTKS gaps because they can turn into negative ones. What does that mean? It can come up real fast, but it can come down real fast as well. Now, if you're using ICT analysis or other things like that, you wouldn't identify this as a gapped area, a fair value gap area. You wouldn't see it, but we see exactly where the value gaps are. We know them ahead of time, and they don't get filled, they keep on playing out and out and out. Gap fills is fake news. You also need to observe price in its natural action and its natural environment. If it's failing structurally, it creates immediate negative structural attraction down to lower structural support levels. If it fails, it's creating immediate negative structural attraction down to lower support levels. Now, what saved Ethereum? It was the same thing that saved everything. The VIX is starting to turn around. It's starting to bounce. Price action will look really random until you understand the role of structure. Now, a lot of people talk about structure, but they don't do it with a scientifically and statistically based methodology. When we talk about CTKS structure, it is absolutely the highest probability structure levels that you will ever find across any price chart. We analyze the entirety of price action, not just a little snippet of what's been done in the past day, past month, past year. No, we do it all. And when we look at gold, we're actually marking up here through level 1 and level 2 standard certification, 70,000 plus days worth of data. It's a lot of data. Yeah, I have to update that. Now, one of the things that is very important, what we saw that we came down to structural support around that 3294 area, and as the VIX absolutely went gangbusters, we came up and challenged the 3380 structural overhead resistance level, and then we're starting to get up to these structural levels inside gold. Now, one quick thing just to note, you can see this little recycle thing here that says update available. What you do is you simply go there and update script, and now that will update the script. I've just done a readability issue here because the lines were getting a little bit thick and fast and probably not as easy to read because the markets have been so goddamn volatile. It's just incredible how volatile the markets have been. So what you can see here, just above literally the current price, we're coming into a level of overhead structural resistance, but the big baby is up at 35.80. There's another one around that 35.20 mark and a reasonably positive CTKS gap in between them. We've seen very non-standardized price action in this particular month. I always update the indicators, so just do what I did there. Right click on it if you're running out of lines and you will see the lines have been drawn. No matter what you trade or invest in, you must understand intercorrelation, interconnection, and stacking probabilities. Here we're looking at gold versus just the normal VIX. We know the VIX came up in the last trading session, and this is a 15-minute chart. As the VIX was doing this, the S&P 500 was coming down into structure. Nvidia, Tesla, all of those stocks were coming into structure as well. We have seen a divergence between the crypto market and the stock market. These happen from time to time. You must be flexible on how you read structure, and especially intercorrelation and interconnection. Remember, smart money profits first, not last. Retail profits last, if at all. I'll give you a really quick primer on how to look at structure, structural failures, structural passes on Solana. Now, this is a 15-minute chart, and of course it's going back until about the 19th, but we've marked up Solana structurally from the start of Solana's chart history. Now, what we've seen here is we had a reasonably positive CTKS gap, and we've come up through there. This is an area of structure at that 138.17 mark, which is really important. We saw it come back, structurally test and make its way up. As soon as it did a cut over here, it put a probability that we're going to the 140 and 14 level. Now, what it means, we don't necessarily get there in the one hit. You may wave up and down. Just going below, a little bit below structure, a little bit above structure, structural support, and a little bit below structural resistance is quite a good way if you're trading. But we eventually hit it and we had structural failures here. We couldn't get above it, we couldn't confirm it as structure at this point. At this point, we had negative structural attraction back to the 138.17 mark. Just because it went a little bit further below and a little bit further above means absolutely nothing. These are not brick walls, they're gravitational areas. And we saw a structural pass here which immediately created positive structural attraction to the 140 and 14 area. And we saw a big move through there, which created positive structural attraction up to the 141.39 area. Structural fail, structural fail, structural fail, structural fail. This was the target. You can tell where your targets are by simply observing what price is doing relative to structure. If it's making a series of higher lows or lower highs, this is really bad because what you're actually seeing, the highs are getting lower and lower and they're not passing structure. That immediately puts specific targets into play. And if those targets get cut through, it puts lower targets into play. If you have a negative CTKS gap, you will get structural overshoot. Remember, just above, just below are very good targets when you trade. You can literally see real time what structure is doing, where it's failing, where it's passing, and you can make your strategies according to that. That is your ultimate certainty. There is no other certainty. And the key to understand, structure is different on every single chart. For example, we noted that ADA had a positive CTKS gap and then it had a lot of structure. Look how ADA's price was structurally restricted at these areas. This is exactly what we would anticipate, because that's the purpose of structure, is to show us where are the sellers, where are the buyers, how strong are they. If you don't have a lot of buyers and if they're spread out because of these negative CTKS gaps, it's going to take more and more structure to create a soft landing for price. Always remember, the price is always intercorrelated and interconnected, and significant levels of structure are very, 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 very important to look at. The ultimate way to de-risk your portfolio is to understand intercorrelation and interconnection across the elements of the cheat sheet. And the cheat sheet is available completely free of charge from CTKS Method. Keep your eyes especially on the VIX at this time. If we see future follow through on the VIX, the major indices, the stocks will bleed, but they will do so between structural levels. All you need to know is where the structure is and the direction and momentum of the market. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.